Woolworths' first half profit ticked up 21%, mainly as a result of contributions from its recent acquisition in Australia. We caught up with Ian Moir, who's CEO of Woolworths, for more.
Look, it's been incredibly powerful for our business to have that information, because when you swipe your card, you know who we are, we know what you buy, we know what you want, what you're most next likely to buy. So we can use that propensity modelling to encourage you into the next category. So the cross-shop is increased. And we also use it to reward customers more. So the more they spend, the more the rewards, and they get more rewards the more, as they come more often into the store. So what we're seeing is our loyal customers are coming in more often, buying more items from us, and feeling as if we're giving something back.
Looking at the food side of the business, sales up 11.1%, comparable store sales up 7.8%, and operating margin there improving slightly to just over 6.1%. So that's in line with your medium-term target. But talk to us about the supermarket format that you're going for now. Is that really proving to be successful?
Yeah, we're seeing it increasingly successful. So what we've done is we've introduced more lines within our foods business. We're building our stores bigger within our foods business. We're offering better prices and we're offering more bulk. Our customers are really responding to that. So the first reaction was from our existing customers. So they came in more often, bought more items. And now we're seeing more new customers coming in and seeing Woolworths for the first time. And what they're saying is, this is not the Woolworths I knew. I can get everything they used to be famous for in terms of quality and innovation and beautiful product. But now I can get the bulk that I need, I get the prices that I want, I get the brands that I want. So they're thinking differently about Woolworths.
Are you attracting a different LSM group?
No, we're attracting the same LSM group, so it's LSM 8 to 10. But our market share in LSM 8 to 10 was relatively small in comparison to others. What we are seeking to do is get more of LSM 8 to 10 and more share of the wallet of those customers who are already coming into us, but perhaps going elsewhere for other items.
Have you been able to grow your market share in the food side of the business?
We've actually been able, over the last 2 years, we've grown our market share well above, we've grown our market share and we've grown well above the market. And that's been accelerating in the last 6 months. So if you have a look at the extent to which we've outgrown the market on the last 3 months, is considerable. So part of that, I think, is our demographic versus the lower demographic, but part of it is our customers are responding to what we're doing.
Food price inflation, you're looking at around 8% this year. Do you think that you can pass on higher costs to customers?
Look, we seek not to pass on higher costs wherever we can. So, we've had a big drive over the last couple of years to keep our prices down and to make sure that we're price competitive. And this is a very competitive industry. So the ability to maximize profit or have profit at a level above your competition really isn't here. This is a tough business. So it's a case of we'll do as much as we can to keep our prices down and do the right thing for our customers.
Let's talk about the clothing side of the business, of course, still the biggest contributor to income. Looking at 993 million rand, it was up 24%, but general merchandise appears to have lagged. If you look at comparable store sales up 4.5%, and that's below price movements over the period. Why is that?
Look, I think for us it's been a tough market in airtime and in beauty. So those are the two markets, but the market's been tough. So we're trading pretty much in line with the market in those two areas, and they're trading well below clothing. But if you have a look at the other side of the business that's included in general merchandise, our homeware is traded above market. So we've seen good share growth in our home business, and particularly in our homeware soft business.
Let's talk about Australasia, because around 300 million rand income coming from there, and that's about a fifth of the size coming from South Africa right now. So starting to make a meaningful contribution. What are your plans for that part of the business, with Witchery, of course, included in that now?
Yeah, look, the Australasian business is trading exceptionally well above the market, and nice improvement on our return on equity and a very good improvement on our operating margin there. Country Road in particular trading well, but so is Witchery and Mimco. So it's a meaningful business, providing good returns to our business, and it is giving us a natural rand hedge. We'll continue to grow that business, and we'll bring those brands increasingly into the South African marketplace.
Talk about Africa, because you added around 6 stores over this period and you're looking to expand further. But you say not in this lifetime is food going to be a significant part of the retail offering in Africa. Of course, it's around quality that you're looking at there. So how are you growing in Africa, and what's your preferred presence when it comes to franchise versus corporate controlled?
We've moved away from a franchise model. So we've moved away from a franchise model in South Africa and are in the process of moving away from a franchise model in Africa. Our preference is to run the businesses corporately, and where we can't, we'll run them as joint ventures where we have majority control. And we're continuing that drive through Africa. But we see Africa as an important market. It's small just now, but it will be big in time. And what we've got to do is make sure that we're committed to that growth, we apply the resources to that growth, and we make sure we get the profile of the stores right, we allocate the right stock to those stores, and we flow the stock efficiently and well, and we get our prices down in those markets. If we can do that, Africa will become a much bigger business for us.
So what is the biggest challenge now with growing into Africa?
So take Nigeria. The biggest issue we've got is how long it takes us to get goods from Cape Town into Nigeria. It's a difficult market to get into, so it takes a long time. It takes a long time to get through customs. It's difficult to understand because it's a new market for us, and it's a market that's only just becoming formalized. So until recently, it only had one shopping mall. So it's going to take time. It's going to take time for us to understand. It's going to take time for our systems to be able to flow goods efficiently and cost effectively into that marketplace.
Just lastly, of course, the online retail space is one that hasn't quite taken off in South Africa. We've got broadband issues, we've got cost issues, infrastructure issues. So you still have got a strategy there. You've got online retail up and going in South Africa as it stands right now. In what percentage of sales is it, and what are you projecting into the future?
Because a tiny percentage of our sales at the moment is growing very rapidly, but it's growing rapidly off a small base. The tipping point hasn't been reached in South Africa, and I think that's maybe 3 years off. But what we've got to do is build the platform and make sure that that platform is mobile enabled, because I think when it comes, most of the communication and most of the transactions will be done through mobile device, and we need to be ready for that. We need to get our platform up and ready the best it can be. We need to get the ability to click and collect in our stores. So we need to fix all of those things, which we're in the process of, and we're investing a lot of money in. But when it comes, it will be meaningful, and we will be well placed to take the most advantage of that.
And you've worked in developed world countries. I mean, do you think it's going to take off in South Africa like it has in, for example, Australia, the UK and the US?
Look, Australia, the takeoff rate in Australia has been dramatic, but part of that has been driven by the fact that there are no duties and VAT applied to the goods that are coming in. So there's a big advantage to buying overseas goods, and you've got an Australian dollar which in the last 2 or 3 years has appreciated. So there are factors that won't apply here. But if you look at the rate of growth, say, of a US or a UK, South Africa will eventually get there. It will just take longer.